Hello guys, so welcome back. Today we are going to look at the way to read market structure in such a way that you are going to understand the context of the market. Okay, the context of the market is simply the story that a market is building so that you understand where the market wants to go, okay, or what the market wants to do. All right. So for instance, if I want to tell you my life story, I'll say maybe I started from here, I went to school here, maybe I dropped out, I didn't drop out, right? All those stuff. So after that, so you know where I was coming from and now where I am and where I am going to, because I'm going to tell you my goals and everything. The same way you have to understand the story that the market is trying to tell us. That is the context of the market. And the only way that you can understand the context of the market is by understanding swing highs and swing lows. So to correctly understand or read market structure, you have to understand swing point. A swing high and it's a swing low. Now, if you don't understand swing highs and swing lows, I assume that you are a complete beginner and I won't admonish you to continue watching this video. I will say quit the video, go to the maybe go to the search button of YouTube and type how to find swing points or maybe how to start forex trading, because I know that you're a complete beginner and you shouldn't be watching this. So how to type forex trading, I'm going to be introduced to a lot of concepts and different things. Consume all of them and maybe come back later to this video and come and watch how to read the context of the market structure to be able to align yourself with the overall overall story that the market is trying to tell us. So without much ado, there's this background noise, don't mind it. All right. Let's look at what I'm trying to talk about. Now, market structure is like a tug of war. It is not like a tug of war. It is a tug of war between supply and demand. A tug of war between supply and demand. A tug of war between what supply and demand, or let me say buyers and what sellers, like we all know. All right. So when a buyer is not able to take a price, a seller might come in and take the price. Okay, let's think of it that way, because I want it to be very simple. I don't want to complicate things with advanced vocabularies or something like that. So let's assume this. You see, this is a swing point that is sitting right here. And you see this swing point. Let this one go far below like that. All right, sorry about that. So this is a swing point, right? This is a swing point that you have over here. This is another swing point that you have over here. And this is another swing point that you have over here. Okay, now this swing point over here, let's assume that this area is a swing point, okay, that the market was coming up with. Let's assume that this area is a swing point. Now this market could not break this swing point over here. Okay, so it's like both of them are fighting. Okay, you couldn't break me, I will try to break you. Okay, so this one couldn't break this one. So this one will say, oh, you couldn't break this swing point over here and you allow a new swing point to form. All right, then you are going to be the target. Okay, and it becomes actually the target. All right, then this thing happen again. Let me extend this one so that you understand it better. That's how we should view it. Okay, so this one tries to break this low over here and it can't. A new swing point is created at the opposite direction. Then this one is like, oh, okay, you couldn't break this low, then I'm going to break you. So this one goes breaking because it is what? It is weak. You couldn't break this low that is sitting right here. Okay, then we have this high that is sitting right here, or this swing high that is sitting right here. It tries to come low and come and break this one. It couldn't break it. Then this swing point is like, or this swing low is like, oh, okay, you couldn't break this low that is here. It means that you are weak. I'm coming for you. And it counts for it, right? So it breaks it. Then this one comes below. You couldn't break this one. Then this one is like, oh, okay, you couldn't break this low that is sitting right there. You are the target. I'm coming for you. It goes for it. So the market structure builds up in that way. Now with that, concept, or with that ideology, let's understand something over here. So it means that a swing point is created to be taken later or to be defended. We create a swing point to protect it or to what? To take it. So this one was created to be taken. This one was created to be protected. This one was created to be taken. This one was created to be what? Protected. Okay. Now, when the flow happens like this, we say that we are in an uptrend. We are in an uptrend. Now it doesn't happen all of these times, and that is where the other conditions of markets come in. When this one shifts, okay, lower, we call it what? Um, a downtrend, of course. And in situations where, let's say, we have this one high, low, high, low, high, low, high, low, high. All right. So you see, this one is created. Like I said, a swing point is created to be either defended or broken. So this one is created. So let's assume that it's going to be broken. Let's assume that the market is an uptrend. Previously, it was in an uptrend. Let's assume that so that everything becomes clear. Okay, so the market was in an uptrend previously. Now it came here, right? So in an uptrend, we expect these swings, the swing highs to be what's broken and swing lows to what hold. Now this swing high is not what's broken, it's held. We expect it to be broken. Don't forget, this one is what is holding. Since this one is holding, it means that maybe this one is what stronger. So this one is rather what weaker. So we will come and what break it, but we couldn't. We created another swing point over here and it started what creating it. And I said, okay, maybe this one is rather the weaker one and this one is rather the stronger one. That is why it defended itself. So you are rather the target. The market comes up here again and this one gets defended again. What does it tell you? We are now in consolidation. We are now between an area where the buyers and sellers have what equal strength. Now, this is where you want to stay out because you don't want to be trading in consolidation. Of course, if it is on the higher time frame, you will be here and waiting for the market to come here, show you some little confirmation, and maybe sell from here towards here, right? Because on the higher time frame, this one will give you a very clear market structure. On the lower time frame, you're going to get higher highs and higher lows here, higher highs and higher lows here, that you can what trade to this area, trade down, trade up, and make good money or good profit off of for this one. But if it is happening on the lower time frame, then you have to what stay out because there you don't know what is going to happen. Okay. Or maybe if you're a scalper, you can just go down and try to scalp something. But the overall idea is to what stay out. So now that you have this in your mind, let's try and understand something over here. Let's try to understand something over here. To understand the concept of market structure or the context of the market, we have to first of all be on the higher time frame to identify the higher time frame what swings. Okay, so let's say that on the daily we make this swing point over here. Let's say that on the daily we did something like this. On the daily we did something like this. Okay, now the market made this swing low. Now this swing low that was made over here got broken by this swing high over here, right? So it means that okay, this one is what? This one is stronger. This one has to be protected. It is what? Stronger. Okay, it has to be protected. It is what? Stronger. Now this one becomes what? A target. Okay, so we assume that a market is going to trade up like this and come down and come and take this one that is sitting right here to complete the cycle of what? The bearish market structure like this, right? This is what you have to put in your mind because this is the ideal situation. This is what the market should do if it were really bearish, right? But anything can happen and we have to flow with the dynamics of what? Price, because on the daily time frame, it can come down like this and new points can be created. Then it means that this one rather become the target. So you find opportunities to trade up to this what swing point. Do not second guess anything. Wait for things to happen. Okay. Now, if the market creates a swing point over here, what is the target? This one, right? This one becomes a target, and you're going to what? You're going to trade lower and come and take it. If this one is not taken and you create another swing point over here, then this one is going to be what? Taken, right? So there's like a tug of war, like I said from the beginning, between sellers and buyers. If the buyers are not stronger, they are taken out. If the sellers are not stronger, they are taken out. Okay, very good. Or you can think of it like this. If the buyers are not able to take out the buyers are rather taken out. And the sellers are not able to take the sellers are rather taken out. So let's look at it that way and let's try to analyze this over here. So we have sellers over here. Let's rebuild this thing. Let me add some market structure so that we understand. Don't second guess anything, okay? Don't second guess. So this is a complex structure, but I believe you are going to be able to analyze it, a random complex structure. So we have this high that is sitting right here, okay? It made this low, it made this low, now it made this high. Now, this area over here is demand, and this area over here is supply. Or let's say sellers are sitting here, buyers are sitting here. Okay, so the buyers were able to move the market up to this area. All right. Now, previously, the sellers assumed this area was a swing point because maybe the market is coming in an uptrend and this swing point is what created. So let's assume that this area is an swing point to form our reference what? Our reference point. So the sellers over here were able to take the market below this what? This swing point that is sitting right here. So what does this tell us? Oh my. All right, I don't think it will go off. I have a very strong battle. All right. So this swing point that is created over here broke this one that is sitting right here. And when the market came over here, it tried to pull back. Okay, so the buyers tried to take the market from here and bring it up. Now what happened? A new swing point was created over here. It means the sellers took the market here. Now previously, this is the original swing point. So if this swing point cannot be broken, it means that this one is the target. These buyers cannot take out the sellers over here. So it means that the buyers themselves are the target. Because they couldn't fight the sellers over here, they are now the target. Okay, so the market comes here, form the swing point. So we expect this market to come down over here to continue building the ideal structure. Always have the ideal structure at the back of your mind because that is what you have to follow. If the ideal structure shifts, you go with the next thing that the market is trying to tell you, the context that the market is trying to show you. So we expected the market to come down here and come and break this low. So maybe we took a trade over here and we targeted this low. All right. And when the market was coming down, it didn't do that. We were taking out at break even. Okay. We were taking out at break even because we were good traders. We were managing our risk. We were doing proper risk management and position sizing. Now a swing point was created over here. Oh, okay. Now the sellers over here could not take out the buyers over here. Who is the target now? The sellers. Because they couldn't fight these buyers over here, they become the target. And they are actually the target. The market takes them out. Okay. The market actually takes them out. Now we have this swing point that is sitting right here. These buyers that are sitting right here are able to take out the sellers. So they now become strong. We have new sellers here. Now they come out and they come and take out these buyers over here. Okay, they come and take out these buyers over here. Now, if they were not able to take out the buyers, we would have considered them to be what? We would have considered them to be what? To be weak. Okay, we would have considered them to be weak, and the buyers could have, moved the price up to come and take them out, but they were able to take out the sellers, so they are strong. We expect the market to what? The market to hold. So when the market retraces up back to this area, these strong buyers over here were able to hold, and they push the market down to this area, but the sellers is the sellers rather, right? These strong buyers over here to the market over here, but the sellers over here were strong and they pushed the market down. The buyers over here also wanted to defend their position and they took the market over here. Now, if these sellers over here could not break this low over here, it means that they become the target and they are going to be taken out. So I hope you understand the flow of how the market moves because we are going to apply this to do a top-down analysis right now. If you don't understand the context that you are in, whether we are which swing point are you trying to target? Which swing point are you trying to create? Which swing point are you trying to target? Which is the target? Which one is the rare swing point or the strong swing point over here? You are just going to what? You are just going to misread the market structure, the context of the market, and and harm yourself. All right. So without much ado, let's look at another scenario. Then you go into the chart. Let's assume this scenario. Always you must use the most recent swing. So the market came from this swing point over here and made this swing point. Now after this has happened, a new swing point was made over here. Now this tells us that these sellers over here are weak, so they might be taken out. So we take a buy and they were actually they were actually taken out over here. And that's nice. That's very nice. So now the market comes down and creates a swing point. Now this is the market building new structure. Market structure is not constant. It is not always ideal. It is not always sexy like the one that you see in textbooks. It is not always like this. Most of the time, it is not even like this. Okay, it follows some complex structure like this that you have to master. Other than that, you are going to find yourself one thing. Okay, so understand that this is a swing point, this is the overall swing low, this is the overall swing high, and what is happening over here is internal structure. But if the internal structure is clear, we have to read it and understand what the market wants to do or might do. Okay, so after the swing high has been created over here, we made a small swing low. So since this thing over here, sorry, since this swing high over here could not break this one, we expect that it becomes a target. But it is not rather the target. We created a new swing point over here. So this small thing over here becomes a target, not this thing. This small one that couldn't break this one rather becomes a target. Okay, we broke it. Now this one is stronger. This one is the target. We break the target. Now this one is stronger, right? This one is a target. We break the target. Okay, so now this one is what? This one is a strong, it is a stronger because it was able to what, break this one. We break it, right? You make a retracement. The strong one got defended and you broke the low that is sitting right here. Now which one is stronger? This one is stronger. Okay, so we don't expect this one to be what? We don't expect the stronger one to be broken. So we expect a retracement right here and the stronger one gets defended and the market drops again. Okay, but there's a but. When the market got here, there was an overall strong point over here that the market has to what, reverse from. Sometimes it does that, sometimes it will not do that. It will just keep on going down like this. So you have to focus on the most current what, swings and have this one in mind for a potential what, a potential reversal or a potential retest or a potential something, right? You have to have that in mind. If you don't have that in mind, it is going to come, it will come back and bite you. Okay. So after this strong swing point has been created that you didn't expect it to be taken, this low that was created took out the strong swing over here. So this low rather becomes the swing one and expect it to be well defended. The market comes down and it creates a swing point in its favor, right? So this one rather, sorry, this one rather, which couldn't take this swing, this strong swing low over here, it becomes what? It becomes a target. Okay, it becomes a target. So actually it is taken out as a target and the market keeps somewhat moving up and probably it will just do something like that. All right, so there's one thing to also what, take into consideration. So let's go down the chart and let's look at some top-down analysis and how we can talk about it. Let's look at my battle. That's on 15%. I think I'll be able to finish this video at a battle runs out on me. So I showed it, so I didn't come. It's a chart view. All right. So let's look at this as an example, Euro USD. So first of all, you have to move up time frame to see a clear swing. Okay, a clear swing like this. Okay, to see something clear, something ideal, something that you are used to. Then after that, you can move on. You can move down to the lower time frame to understand what the market is trying to do us. So with this, what do? We move up. I can see some highs and lows very clearly over here. That you can see that this was made. Also on a 30-minute time frame. I just changed the instrument. It doesn't matter. Let's just analyze an instrument. This one is Ethereum. This one is Euro USD. I was on a 30-minute time frame, I believe. Minutes time frame. All right, let's just analyze. Let's just analyze it. It doesn't matter. They just conform to everything. Okay. Yeah, I think I was here on a 4-hour time frame. So we make this low over here, then we make this high that is sitting right here. Okay, but we have some internal structure over here. It means that this one is noise, so I shouldn't be reading it. There's more going out the higher time frame because under normal ideal condition, we expect something like this: single candles in, single candles, like single candles in, single candles out, single candles like this, right? But immediately we make something like this and start building internal structure. It means that we might be reading noise, so we move up the higher time frame to see what the higher time frame is actually doing so that we'll be able to trade this one perfectly. So let's move on to the daily time frame. So this is what I do on a daily basis. You can copy. All right. So this trick that you can just pick up. So the daily time frame, we made this swing that is sitting right here. And this is the context. We are reading the context of the market on the daily time frame. And we are going to send it straight to the lower time frame and position ourselves for an entry. That is what we have to do. Now you made this swing point over here. Observe this one that is sitting right here. This low that was made was able to break this swing high over here. So it means that this low is what is strong. We expect it to be what defended. Okay, so I don't expect the market to come down over here. I expect it to do something like this and continue higher. I hope you understand. I expect it to do something like this and continue higher. I'm not trying to force an expectation on the market. I'm trying to flow with the direction that the market is trying to give me. It broke this high that is this swing high that is sitting right here. So after the break, I'm expecting something like this. If that doesn't happen, it means that this one SF is what? Weak. Okay. If it is weak and the market cannot break it and it gets defended, then we might be heading into what? Consolidation, because this one might also defend, and to come here, the low will also defend, and you're going to get something like this. Every point is defending. Bears are defending, bulls are also defending. Okay, so we have to be careful. All right, so this is what we have on the daily time frame, and I can't also ignore this strength low that is happening over here. Okay, now the story is that this one got taken, so this one is strong, like I said. This swing point that was created over here tried to calm down and come and take this one, but it couldn't. So it becomes what? Weak. We expect the market to come and take it. So we can position ourselves here and buy. Right. Now, the swing point that was created over here had an opposite swing point just created above it. Right. So the question is, okay, you think you are strong? You think you are strong and you're going to be the one that is going to break this one. But why did you have an opposite swing point, get created over here? It means that you are weak and you can't actually come and what? Come and break this one. All right. This thing is disturbing me. I can't plug in my charger because we have power outage. Something wrong with generator or something. They release some kind of notice. They are going to work on the system or something of that sort. But I think I will to complete this video. Let's not worry about that. All right. So if this one is strong enough, then why didn't you break this one? Why did it leave a new swing point being created over here? It means you are not strong. So this one being created here, it means that this one might be what? Might be taken. Or this one might be what? Might be the target. Okay, this one might be what? Might be the target. So we focus on what? The market coming down and coming to take this one. So we are flowing with the direction of the market. We are not trying to predict anything. We are flowing with the direction of the what? Of the market. So now that we know that, okay, now a new swing point has been created over here, and this one might be the target, we move on to the lower time frame, and we also align in that what? In that direction. Okay. So on the lower time frame, that is actually it's still the higher time frame, but let's just be here and let's just talk about it. We do it or we find a clear way to enter the market, or we find a consolidation. Okay. Now on the 4-hour time frame, you do what? You have this high that is sitting right here. Okay. Now this high broke this low that is sitting right here. So this becomes what? Strong. Okay, this high becomes strong. A new swing point has been created over here. I expect this strong swing point to be defended. So the market comes up here. I don't expect it to come and take this one. Okay, I don't expect it to come and take this one. So the market comes up, it can't take it. It creates a new swing point. Let's go to the 1-hour time frame. You will see it better. So this is the swing that was created on the what? On the 4-hour, right? And this is the one that was created, the swing high that was created on 4-hour, and the swing low that was created on the what? On the 4-hour. Now, what is the daily doing? It is bouncing between what? Swing points. So this is just consolidation that you shouldn't be what? You shouldn't be trading. People will force and try to get an entry over here and get stopped out. The swing point over here is defending. This little thing over here, the 4-hour swing point is defending. This little thing over here is also defending. So who is the target right now? Okay, now we don't know who is the target because this one is defending. This one is defending. This one is also defending. We need a clear brief to see who is actually what? Who is actually having power over the other. Okay, but don't forget on the daily time frame. On the daily time frame, we have the bias that this one got created in the opposite direction. So this one might be the target until a new one is created in the opposite direction like this. So that this one becomes the target and it continue to trade up. But for now, we are bearish. So we are trading towards what? Either this swing point for you to defend itself or for you to be what? Taking. So you can enter 2 trades if you find a very nice entry. This one becomes the first target. This area over here becomes the second target, or this overall swing point. I do not expect the overall swing point to be what? To be traded into because of one thing, and that one thing is because of the fact that overall we want to be bullish. That is why we created this thing over here. So this retracement, should be just little and the market can continue to what? Move up. But like I said, if this one is not able to take this one and a new swing point has been created in the opposite direction like this, then itself it becomes what? A target. So let's see the market can take it out. If it cannot take it out and it defends itself, then this one might be the target. Okay. So since we are consolidating on the 4-hour time frame, we cannot what? We cannot say much right now. We cannot say much right now. Um Either than the fact that we have to what? We have to wait and see a clear direction that the market wants to take after this consolidation. If it breaks below this consolidation, I will maybe wait for a little bit of a retracement and target this swing high. Either it's able to defend itself or it's not, I'll just target it. Okay, if it's able to defend itself, then it means this one rather is the target and I'll just target this one. So we are just following with the what? Following with the swing point, and we're able to what? Determine the story that the market is what? Trying to tell us. Now, this one is just market structure, naked market structure. If you want to be able to read it nicely or read it, perfectly, you should be able to have some kind of price action concept that you fall on. Maybe your strategy, smart money concept, ICT, whatever, ICC, open range break, support and resistance, indicators, Fibonacci, those kind of stuff. So have a strategy and utilize this way of reading market structure, and it's going to help you. I think my PC is running low, so next time I'll just make a video and look at a lot of examples about this so that you understand it what better. All right. Have a nice day, guys. I love you. Peace. God be with you.